Voila. First, special case or the kind of example I wanted to give are geographical information systems. These days, we see in the last 5 to 10 years, we see an increase of information systems that do not only register pure traditional data, transactional data, like you said before, but they start combining it with geographically related data, basically meaning locations. Because we see that a lot of products, a lot of devices, they start to carrying GPS chips, or they have some kind of a barcode which allows tracking in one way or the other. So we see that there's a surge of these type of systems. They call them GIS, geographical information systems. So that information, that location-related data will be stored in one way or the other. Also, like a lot of IoT, Internet of Things applications, in a lot of cases, they carry some kind of a chip, or they carry some kind of information which allows you to identify where they are at a certain moment. And so that allows companies to gather not only location-related data, often that's very fine-grained data. Think of IoT applications like all the different devices that you have around your screen, your speakers, your lights. They all carry identifiable information. You all locate them on a certain place, and you can all process information that is location related. And actually, if you look at those geographical information systems, you might see that they have different characteristics in them. So on the one hand, they have a clear TPS dimension because they can focus on gathering transactional data, but with location data into it. A lot of those UPS, DHL kind of companies, what they will do is they will try to embed location-related data in their systems. They will often not have GPS tags on their packages because that's too expensive, but they will have GPS systems in their delivery trucks, so they will be able to monitor all their trucks, and they will often scan packages when they go in, when they go out a certain truck. So based on that, the location of the truck and the scanning of in and outgoing packages, they will enrich their data with geographical location-related data. What we often see these days is that more production-related industrial organizations, they will monitor a lot of properties of the systems, the compressors, the engines, the machines and robots that they have in their manufactories. Well, they will also monitor a lot of things like what's the usage, what's the currently on the system, is the pressure okay in some cases. So they track all kinds of properties of those devices on premises. Could be their own systems, could be the ones of the clients. If they sell a certain product to a client, they might monitor the activity of the device remotely as well. And so, yeah, they will not only have traditional data, but they will enrich it with location-related data in a TPS dimension. All transactions, things, events that happens in an organization. You could also look at them from an MIS dimension to prepare, as we said, standardized ex-ante upfront fixed reports. Traditional, but in this case, including location-related data. We already used this example a little bit before. For instance, if you want to know the most frequent routes taken by your delivery trucks, that's kind of an MIS question that is answered, but it can be done, for instance, by a GIS. If you want to see what's the flooding suppose that there is a flooding in a certain area, and you want to see the different situations in different states or areas, you could use GIS as well to see how is it to create a report, how is it currently, what's the status in the different areas. Or even to go to a DSS dimension to allow you to do decision making, simulations, impact analyses, less predefined, less fixed, more ad hoc. For instance, what would be impact delivery time when the rerouting happens. If we have a flooding disaster, let's calculate, let's visualize the response time that we have in certain intervention scenarios. First, we do this area, then we do this area, or we concentrate more stuff here and then more stuff there. What would be the different alternatives, the different scenarios, and you do some kind of sensitivity impact analysis. One very well-known kind of GIS system that was used during the Corona pandemic was, for instance, this kind of dashboard that they created, that the Johns Hopkins University created to monitor, to track the cases and the casualties due to the coronavirus. This is clearly geographically related data. It was even without GPS systems, without GPS chips or whatever, but it allowed you to get kind of a report, a standard, a fixed, a predefined report based on data, and that data was enriched with location, in this case, the nationality of people. Another focus or another example I wanted to give you is that often enterprise systems, TPS, MIS, DSS, GIS, we also have GDSs, group decision support systems. Some organizations are very small and their decision making often goes ahead in a very informal way. In bigger organizations, it's sometimes not easy to, once you have the data, to actually also act upon it, to take decisions. And also here, for sure, not all organizations use this, but these are systems that exist and that might be helpful. And they're a specific type of decision support system, group decision support systems. When you are in a big group and you want to make a decision, what often happens if we start discussion, even for instance in a room like this, what you will see is that certain people, they will naturally take the lead, they will start the discussions and they will voice their concerns, their ideas and so on. And that's good, but in big groups we see that often that's concentrated to only a few people. Often it's only a small percentage of people who will freely say what they do, what they think, and what's the decision that they think the company, for instance, should take. So these group decision support systems, they were designed to help groups in that decision-making process and to also gather the voice, gather the insights from people who are not so vocal, who are not intrinsically inclined to share their ideas and whose opinion, of course, is equally valid. So we see that now some systems have been created where you can do some brainstorming, create word clouds, where you can do some voting, where you can do some ranking. And so if you have a problem that is not just to be solved by 2, 3, 4, 5 people, but where there's a big group of people, 20 people, or even 10 people, 10, 20 people or more, then you can use these kinds of systems. Think a little bit about this VUB system that basically we used in the previous lecture, where I allowed you, or where I basically suggested you to in this case, okay, I asked you to respond to a question, but I could equally ask a similar question for you to vote, like which of the following statements do you think is most suitable, is most realistic, reliable for our company. So I could ask you to answer some kind of multiple choice question. I could ask you to do some kind of a poll, or to create a word cloud, to do some brainstorming, to sort certain statements and so on. So this is of course just in a more, this VUB system is more for a teaching environment, but similar systems have been created for organizations as well. And the nice thing is that it used to be the case that you needed to create special rooms for that. There used to be organizations that had specifically dedicated rooms for group decision systems, where they had round tables and screens for everyone, and then people could enter the system and they could do these kind of brainstorming and voting and word clouds and so on. And nowadays it's much more easier because people have their own devices. Often they have their laptop, but even their smartphones or their tablets, and so they can enter into those systems and they can vote, they can share their ID. So it's even a very low level, very accessible, but often very useful type of decision support system, because you can drive decisions by getting into the opinions and getting the thoughts of a large group of people. So it can be used for several phases of decision. You can use it for brainstorming, but you can also use it to see what are the most relevant problems we have in the company, or you observe a certain problem and you want to have some ideas what might be the reason for that. So you can also generate the drivers of the problem. You can use it to see what are the proposed solutions and what are the pros, cons, what do people prefer in terms of a solution. And so, as I said before, it has evolved from dedicated conference rooms like 10, 15 years ago to now in the last few years that most people, they have their laptop, they have their mobile phone with them. And basically we could set up such a session right here. All you need is an internet connection and your device. Of course, as always, this is only a technological means, it's a technological underpinning. If you want to moderate it in a good way, you also need very good moderators, people experienced in doing that. Yeah. So just to see that, okay, sometimes you have very specific systems that go for decision support systems, and even a very simple way, because here you don't need advanced statistics and so on. And sometimes you have systems which combine characteristics of several types, TPS, MIS, and DS. Yeah. All right, let's shift to the second typology. And again, I mean, I use horizontal typology, but this is my name. This is not something that is known in literature. But these other, the below listed systems, they are widely known in literature and in practice. And so those are systems that the division is not based on a hierarchical, vertical way of how people use it, higher or lower down into hierarchy. No, it's mostly situated in, like, is it the middle of the value chain of Porter? Is it the left side, the right side, and so on. And so now we will focus on ERP systems, enterprise resource planning, supply chain management systems, SCM, customer relationship management, CRM, and human resource management systems, HRM. In fact, the last one, we will actually not really discuss it in detail, and also supply chain management, customer relationship management, we will talk about it, but we will cover that much more briefly than the first one, which is in this case the most important one, in the sense that a lot of organizations these days, they use them. And so I think it's interesting to know what their characteristics are, where they come from, and what you should know in terms of how to manage them. ERP systems are, in contrast with TPS systems that we just saw before, they are not small or very focused, I should say. They're not very focused applications. ERP, enterprise resource planning systems, are systems that focus on an organization-wide application. So the philosophy of enterprise resource planning systems are systems that want to support everything in your organization. Basically, the whole value chain of Michael Porter. So not one, not two, not three, all activities they want to cover. So organizational, administrative data and processes for all activities in an integrated way. So that means, okay, they're quite big. So that means that if you want to cover everything in an organization, and sometimes we have organizations with thousands of employees, with millions of customers, then of course you know that these systems they're quite expensive, they're quite complex. Implementing them, realizing them, putting them into production in an organization is also quite complex, and you have high potential returns and benefits, but as it is risky, those do not always materialize. Ultimately, those ERP systems, they have two main goals. So what they want to do is they want to support all those organizational activities, but they have two main activities which are the typical selling points, but they're also very valuable in the sense that if you successfully implement an ERP system, you will obtain two important things. First of all, you will realize integration. What I said already in the first typology is that, okay, if you have different TPS systems, one for your sales and marketing, one for your order system, one for your production system, one for your inbound logistics, outbound logistics, payment systems, and so on. You have different types of systems, and then we're only talking about the TPS level. You should sometimes maybe have them talk to each other. Certainly, if you want to create reports, MIS, DSS, and if you want to get to ESS systems, you need to integrate all of them. And that is a very complex thing, both on a technical level. You have different technologies and you need to exchange that type of information, and sometimes one information system changes, so then you need to change the connections of that changed system with all those other systems. So that is difficult. Also on a semantic level, sometimes the definition of a certain concept is different in system A than system B. So integrating systems is very complex, is very costly, is very difficult. And those ERP systems, they say, well, you don't need to do that integration because we offer you one integrated system. So it's by definition integrated on a technical level, We make sure that the technology nicely fits, and it's integrated on a semantic level. What we mean with an order is everywhere the same in our system, because it's the system, it's one system. That also means that there will be no duplication of data. That means that whereas in a lot of organizations where multiple systems are there, you still have kind of stovepipe system architectures where, for instance, you might have customer data in the sales and marketing department because they have leads and potential clients and they want to talk to them. So they have their email address and their phone number and their address, but they might also have customer data in the financial or the accounting department, because if they write an invoice and they want to get a payment from a customer, they might also have, for instance, the IBAN number, the bank account number, but maybe also the address or the name of the customer. And if they need to ship products in the logistics department, they might also have certain customer data. And guess what? That data might not only be duplicated, it might maybe even be inconsistent, because maybe at some point of time the customer changed his or her address and they notified the guys of the logistics, look, please don't deliver this product to location A. I have moved, so please make sure that you deliver the product to location B. But that means that it might only be changed at the location of the logistics department, and that the sales guys who want to contact that person for a next sale in the future, they might still go to the old address because they were not informed of the transfer of the location of that customer. So having different systems, stovepipe systems, isolated systems that do not talk to each other or do badly talk to each other, that generates duplication of data. So that's not good from an information perspective. And also creating links between those different systems to avoid that they become isolated is very challenging. And so the first benefit of those ERP systems is they say, well, we don't have the duplicate data. We have everything in one location and we integrate everything. So there is no duplication. Everything is nicely integrated. That also means that if you have integrated everything, well, we already saw business processes. Some of them are very simple. Some of them are very complex and very large. But some of those business processes, they also span multiple activities within Porter's value chain. So that means that if you want to automate certain activities in your organization and you have all those systems which are isolated and separate from each other, it's very difficult to automate in an efficient way, because you still need to make that link and you need to make sure that an event in one system triggers an event in another system and so on. So also for automating stuff, for making sure that things go smoothly and automatically, these integrated systems, they provide a big advantage. Integration also leads to a good way to perform global optimization into local optimization. What do I mean with that? Sometimes companies say, well, one of our strategic action points or one of our strategic elements is that we want to minimize costs. We want to make sure that we make as little cost as possible because this is part of the profit equation. And so they might say, well, let's minimize our stock inventory, because holding a good, it has a certain cost. You need to have the warehouse, goods may become bad and so on. You need to manage them, you need to have them secure and so on. But this might be that lowering the costs at the warehouse level might lead to costs in sales. For instance, if a customer wants to buy something, often he or she, they want to have the product immediately or in a short time. And so it might be that it's better to increase your stock level a little bit, which implies an increased cost, but then to avoid other costs at the sales level. So it's not always because you optimize locally in one department, in one system, that you will optimize globally. And again, if you integrate systems, you might be able to compare those costs or to do an analysis that is more encompassing, that is more global. And so all in all, it allows you to do cross-departmental processes, comparisons, analysis. So this is a very big advantage of those ERP systems. They claim that they have one integrated system with all its benefits. Yeah. The second big advantage, or the second big value that is often proposed with ERP systems, is that they offer you standardization and best practices. Companies providing ERP systems, they are often very specialized companies. Market leader often is, by the way, a European company. It's SAP, but you also have Oracle and other competitors who provide ERP software. And those companies providing that type of software systems, that's their business. That's what they do. That's their specialty. And part of the offering that they make to their customers is saying, well, that's what we do all day. So here is, or that is where our expertise is. So we know how to arrange a logistics department because we have implemented this software not only in one company, we have implemented this in tens or hundreds of companies. So trust us, we know how a logistics department know. By the way, they might even have implemented that software in one of your competitors, very similar companies. So they really know what are the best practices, what are the standards in a certain industry. And the software that they provide, well, that is designed, that is written in such a way that they are aligned, that they are incorporating those best practices. What might be a best practice, for instance, when you're a company and you have customers placing certain orders, you want to have them paid. You don't want to have orders that you deliver, but you never get a money, because then in the end you will go bankrupt. Now, what customers also find nice is that they only pay once they receive something, once the service or the product has been delivered. So at some point you need to make kind of a decision. Do we take the risk of first delivering the product and the service and then only get paid afterwards, or and then having a happy client? Or do we go for the situation where we say, no, sorry, we want to have money up front, everything or part of it, because we need to mitigate our risks. We need to make sure that we get the money and that we do not just deliver products and services without getting the money. And so some best practices, they focus on that area. They say, well, one simple way to do that, for instance, is to look at the history of the client. If he or she always paid well in the past, then it's very likely that he or she will again pay reliably in the future. Or you might say, well, let's look at all the orders that are still outstanding of the customer, and we'll add to that the value of the new order that the customer wants to place. And maybe we have certain thresholds that we want to take a risk of 100 euro, 1,000 euro, 10,000 euro per customer. And depending on the amount of accounts payable that we have related to that customer, we might say yes or no to the order. And this is a very simple best practice, but of course there are more advanced and more complicated best practices that they also incorporate. So if you want to use those ERP systems, well, most likely they will say, well, look at us, we provide you everything, not many systems that you need, only one, a big one, but only one with all the advantages, integration, and on top of that, we will provide you standardization, best practices. If we translate that to Porter's value chain, it means that we will not just focus on one activity or on two or on three. No, we will focus on everything. So that's why I draw in a circle here. The goal of those ERP systems is to cover all activities in Porter's value chain. As I said before, integration of data means that you do not have copies of data in the marketing, accounting, and production environment, but that you have one central database, and that central database will provide the data to marketing functionality, production facilities, accounting departments. Yes? Yes? Sorry? Yeah. Yes. What do you mean with starting from top to down or down to up? Yes. Mm-hmm. 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 We will discuss that later on. So there are different approaches to implement ERP systems, well, enterprise systems in general, and we will have some slides towards the end of the lecture. Okay. Standards and practices, you even have some books who describe those standards, who describe those processes, where you really see these are the reference models for industrial enterprises. These are best practice processes that exist, and these are implemented by these organizations. Now, just to give you a bit of a background of how those systems arrive, because I mean, doing everything sounds easy, is difficult in practice. So how did this basically start? Well, in the 60s of enterprise computing, a lot of companies, they were confronted with a very fundamental questions. And then we were, in the 60s, you had more still production companies, also in Europe, whereas now, of course, we have much more services companies. But in those days, it was more oriented and focused towards production companies, certainly when you looked at enterprise computing. And so they had a very fundamental question: when should you place an order for the parts of your products? Sometimes if you have something simple like a table and maybe you just need a leaf and screws and legs, you have 3 or 4 types of parts, ça va. But if you are creating a more complicated product, like a car or an airplane or a helicopter or whatever, you have a bill of material, as it is called. You have many products. And you also want to make sure that you never run out of stock, to interrupt your assembly line, and also that you never run out of stock to make sure that your customers, when they ask a product, that you can deliver it. So this is a very fundamental question for companies, and what they are confronted with is the following. So they have the amount of inventory, the units of a certain product they have, and throughout time this changes. Typically you start with a certain quantity, and if you make some very basic assumptions and you hope that the consumption is constant and so on, you will see that this quantity declines because you use some parts of the inventory or you sell them, and then at a certain point in time you need to order them, and then again you use them, you need to order them, you use them, you order them, and so on. So the average quantity in that case is your order quantity divided by 2. Now that sounds nice, but often a lot of those assumptions, they are not held. Often this is not constant, and you often don't know upfront what will be the rate. You often also don't know how much time it will take to deliver your order. And of course, there's also a question like, how much should we order? Should it be this amount or should it be the double amount or so on? So this was a question that was confronting a lot of organizations, and that question has some boundary conditions, in the sense that it seems an easy question, but it's difficult to solve, because in the end what you want to do is you want to minimize costs, because there are different costs involved when you order products. You have the inventory, the holding costs, having the warehouse, making sure that the goods are safe and well stored, having the order costs. Often when you as an industrial company, you order something, you will have a fixed price and a variable price. So the fixed price occurs every time that you perform an order for the delivery and the administration and so on. So you want to minimize your inventory, but you also want to only order when it's necessary to avoid those fixed costs occurring too much. You also want to make sure that you have always inventory. So maybe you want to have a minimum inventory, you want to have no stock break. And the first solution, or the first kind of equation that operational management scientists and practitioners developed was the so-called economic ordering point, the EOQ, where they said, well, actually mathematically, analytically, you can prove that the optimal economic ordering point is determined by this Q star, meaning it's the square root of 2 times the annual demand, the fixed price or the fixed cost of an order, plus the annual holding cost per unit. So it makes sense, because the higher the demand, well, the higher the quantities you will ask, the higher the fixed costs, well, the higher your quantity will be, to make sure that you can spread that cost over more units. But the higher the holding cost to keep 1 unit, the lower your quantity will be that you order. That's math. You can prove that in an analytical way. And you can even visualize that. If you have the reorder quantity and your optimal point, you need to decide it. Well, what you want to do is you want to minimize your annual costs, and basically there are 2 costs involved. You have the holding cost, so the costs that you pay for having units into your warehouse, and that increases as your reorder quantity increases, because you will need to store more units. And then the ordering costs, which decline if you increase your reordering quantity, because you can spread your fixed costs over more units. And so the total cost is the sum of both of them. You get this line, and what you want to do is you want to minimize it. So here you have this point, and this quantity is then the economic order quantity. So analytically speaking, you can calculate it, you can write it out, but as I said before, there are some limitations that make it very complex. This equation assumes that there you have a known and a stable demand and lead time, that there's a constant price of products, that you don't need any buffer inventory, and so on. So this was a challenge for companies, and they had an analytical solution, but that was a bit in the ideal world, given that those limitations were not present. And so they were looking for something better. And that's the time when they developed what was called, not yet ERP, but MRP, Material Requirements Planning Software. And what they would do is they would take as the goal, well, let's look at a way to determine the amount of inputs, of raw materials required for a production process to fulfill orders that are placed by customers. So what it will do, as I said, it will look at the bill of material, all the products, all the components of your product, and it will perform calculations on each of those parts in your bill of material to make sure that everything is there on time so that you can always deliver products to your clients and that your production line, that your assembly line never gets void, that it's always up and running. Can be very simple if you have a table consisting of a leaf, legs, and screws. If you have an helicopter or an airplane with tens of thousands of components, it's already more complex. But even in that simple case of a table, suppose we want to manufacture tables, and suppose that we want to manufacture very easy tables, very simple tables with only a table leaf, legs, and screws. Suppose we know that each time a customer orders a table, we need 1 leaf, 4 legs, 8 screws. What would this mean? I mean, you can still do it manually, but you will see that it's already quite complicated. Because suppose that this is the number of incoming sales that we have of tables. The first day, people, they ordered, so customers in total, they ordered 2 tables. Second day, 1. The third day, 7. The fourth day, 3. Fifth day, 0, and so on. What does it mean? What does it mean in terms of ordering the components, the bill of material, the leaves, the screws, and the legs? What does it mean for your production department if you want to lower costs of inventory and so on? Well, that means that if we know that legs take 2 days to arrive to our company, if we order it to our supplier, it takes 2 days to come to the factory. But leaves and screws, they only take 1 day from our supplier to get to us, to the manufacturing facility. And if we want to minimize inventory, that means that, okay, on the first day, there are 2 tables that were ordered. We want to deliver them as fast as possible to our customers. So that means that we will need to order 2 leaves, 16 screws, because we need 1 leaf for each table, so we will need 2 leaves in total. We need 8 screws per table, so we need 16 screws in total, and we need 2 legs per table. 4 legs per table, so we will need to have 8 legs in total. Now we know that there's a difference in procurement time, the time from ordering it until delivery. We know that it takes 2 days for the legs, so we start as soon as possible. Immediately on the day that we get the order, we place the order for the legs. We know that they only arrive at day 8, but we also know that for leaves and screws, it only takes 1 day to be delivered. So, okay, if we want to minimize inventory, we are not going to order them immediately. We're going to wait 1 day because we know that they will also arrive on day 2. We will do the same for the screws. We will not order them on the first day. We will order them on the second day because then they arrive on day 3. So on day 3, we see that there is the delivery of the leaves, of the screws, and there's a delivery of the legs, all at the time that we can actually produce them. We do that for the first day, but then of course the second day you see there's 1 sale, so we will need to do again the same. We will need only have 4 legs, 1 leaf, 8 screws, and we will as soon as possible order the legs, but with the leaves we delay them with 1 day to be ordered, to be sure that we have no inventory that's not needed, and to make sure that we have all the parts at the day that we need to produce. So I already needed 2 or 3 minutes to explain this very simple bill of material of a table with 3 components. What those material requirement planning software systems do is they will allow you to do that in a very advanced way. So not only for 3 items, but or 3 components, but for more components. Also look at those interlinks or these links between them, also to take into account other elements. And of course, for a table, you could still do it manually with these tables. But in reality, if you have more complex product, it becomes much, much more complex. So these MRP systems, they really focused on how can we make sure that we order products on time in the right quantities, because that was an essential question those days to be competitive. I think okay. The only thing that works is that, or that we do, is that we work in a very reactive way. We only order products at the moment that we have an actual sale by the client. And so that's a shortcoming, because this client demand is unknown in a material requirements planning system. So you will only react once the customer places an order, you will take action and you will do your thing. So maybe you want to predict or to analyze the demand so that you maybe already have the tables ready before they are ordered, but also not wanting too many tables in your inventory and so on. It also does not take into account your production capacity. Here we see that at some point on day 3 we see 7 tables, but maybe your production facility, your manufacturing system only allows you to produce 3 tables at the same time. So then you need to make this calculation more complex. Then on the first day you need to order 3, and then the next day again 3, and then you need to keep 1 and to add it to the next one, those 3 that are ordered on day 4. So the system becomes already more complicated. And so those were shortcomings of those initial material requirements planning systems that were then addressed in those successors, and those were called MRP 2. Providing you more highly advanced manufacturing planning systems. They were, however, still not complete ERP systems because the focus was limited to manufacturing, producing stuff, but there was no integration with other functional domains like accounting, like marketing, even logistics, partly maintenance, not integrated, and so on. If we map that again to Porter's value chain, that means that they were mostly focused still on operation. And that's not ERP, because as we said, ERP focuses on everything. The first real ERP systems, they arrived then in the late 70s, so 15, 20 years later, where we really saw that from those MRP systems, additional functions were attached to it because they saw this thing is managing the crucial, the fundamental heart of our company. And so then they try to link and to add all kinds of functionalities to that, so that in the late 70s you got the really first ERP systems where people saw that those benefits indeed they arrived, that one could see that there was only a one-time data input which led to higher efficiency, not several people entering the data, all the data consistent, all the data interlinked, that you got real-time processing, because if you have isolated systems that you need to interlink, then you need to often transfer data from one to the other, and if you're limited in processing capacity, there's a bit of a delay. That overall you could have a good production planning that is aligned to your inventory management, to your logistics, that you could make better arrangements with suppliers, better financial overview, and so on. And so that means, for instance, that in a real ERP, you really see that they cover all the activities in Porter's value chain, but that you also see those cross-departmental business processes arriving. For instance, if a customer places an order in sales and marketing, it would mean that at that point you can say, well, let's write already the invoice, or let's write already an entry at least in the accounts payable. This is an amount that that the customer should pay, and we also make sure that if there's not sufficient inventory, that we will assemble the product. If we want to assemble the product, it might mean that we don't have enough goods in our warehouse. So then we need to prepare our procurement to make sure that the goods that we use, that later on that they are replenished, or if they are not there, that they are delivered. And then, of course, it also means that at the time that we're doing the operations, we might already schedule a delivery for the customer to get its product. So maybe we might already reserve a truck in 2 days when the product is assembled, that we have a truck arriving and that it might bring the product from location A to B. And then, of course, once actually the procured goods are delivered, and when you say, okay, our inventory went down, we need to reorder our products, well, then the procurement will also make sure that the inbound logistics are taken care for, that the products, when they arrive, that they are actually taken, received, and that they are stored, and that, of course, that we also perform the payment to that supplier to make sure that everything is settled in the correct way. And then you see that, okay, these kind of systems, they cover business processes that span different departments, span different activities in Porter's value chain, and this really looks like a business process, and that's different than those isolated TPS systems that we saw in the beginning of the lecture, right? You saw those very first integrations of systems in the 70s that was increased in the 80s, where initially they still were centered around those primary activities, mostly for production companies. You saw that later on in the 80s, they were also putting more and more focus on those secondary activities, and they also became more relevant for companies that mainly had services. And so they were also intensively integrating HR administration, planning, maintenance, procurement, and etc. And that is then, as I said before, that's the time when added value also becomes clear for non-production companies, such as insurance companies, retail companies, consulting companies. Yeah. For instance, they were focusing then on those support activities. It could mean that, of course, if you have staff running around in your company, it means that you will need to pay them. And you will need to also make sure that there's a payment, that there is in your accounting system, that you register that a payment has happened to a certain staff member. So you also need to create those processes. At the same time, when you're in a production facility, manufacturing, well, then you will still need to be able to see, well, do we have sufficient staff in each and every day to make sure that our production runs run adequately? So you need to make some kind of a planning of your staff, who will be there on which day, in which location, and so on. So you also saw that they were combining those primary activities with the support activities to really cover most functionalities in an organization. On top of that, as I said before, we don't only have the integration, we also have the best practices, and there were simple best practices, but also more advanced best practices that were improved over time. So you had best practices like available to promise, capable to produce. Available to promise was or algorithms that make sure that if we promise a certain customer to deliver a product at a certain date, are we sure that we will have our products available, that we will have our raw material as well, and if not, that we need to make sure that we order it. Are we capable to produce? Does not only take into account the product flows, but also make sure that you take into account your production capacity. That if you promise something to a customer to be delivered, that you not only make sure that you have the raw products, but you also have the capacity to produce it, and if not, that you schedule additional production runs and so on. Yeah. You not only have best practice for the production environment, but also for other functional domains like marketing, HR, and finance. Yeah. It started with a few specialists, big companies. What we see these days is that you also have ERP vendors that are specialized in different industries. Some market leaders, the big companies, the well-known ERP vendors, they claim that they are able to do all industries and all types of companies, but you also have ERP vendors which, for instance, focus on the finances industry. They say, well, our systems are specifically for finances because, I mean, if you're a bank, you have different concerns than if you produce cars. And so you have some specialization happening there. And these companies, typically, they make sure that they cover all the languages, currencies, timing zones, and so on. Yeah, go ahead. Sorry? ATP, CTP, so these are algorithms that allow you, if you are the customer, you order something to me, and you say, I want to have this product in 1 week, that allows me to judge, can I promise it to you or not? Will I be able to deliver in 1 week to you, yes or no? In order to do that, I need some information. I need to know, do I have the raw materials? Do I have the capacity to produce it? And if not, I will need to order additional raw materials, or I will need to schedule additional production runs. So these are best practices that allow me to determine as a salesperson, as a company, to say, I will be able to deliver the product to you in 1 week, or no, I will not be able to do that. I will only be able to do it in 2 weeks. They are best practices that are on top of these basic MRP functionality. Yes. They are not a tool. They are best practices that have been incorporated in the software system. So that means that if you have an MRP system or an ERP system installed and it's running and it has all the information out there, that when you enter a certain product order, you will be able to judge whether you are able to provide it on time, yes or no, and take remediating actions if needed. So it's not a tool on its own. It's a best practice that allows you to assess, will I be able to deliver that product on time, yes or not? Will I be able to come up with my promise, yes or no? For that, you need all the information in the system to know what's our inventory, how long does it take to create a product, how long does it take to order an additional product, can we schedule an additional run? So these are calculation methods, algorithms that allow you to analyze the situation and promise, yes or no, will I be able to provide that product on time to you? Yeah. A query is part of it, but as I said, in case it might not be the case that you have all the necessities to produce it, it might also trigger actions like ordering a product, scheduling an additional production run. So it's not only a query, it's more advanced than that. Yeah? Really best practices incorporated into a system. But another, if it's simpler to imagine another best practice, it could be this assessment of the creditworthiness of a client, where you say, will we allow to deliver a product or service to the client before he or she has paid? Well, you might again use information in your ERP system to do that. There might be a best practice in the industry that says we only allow credit for the customer until 1,000 euros. So we look at what is the outstanding credit yet for the customer, already orders did he or she place in the past, and what's the amount for that, plus the new order that was placed. If it's above this 1,000 euro, we don't allow the order to pass without payment. If below, we allow the order to pass. Yeah? So the idea is that you have systems where best practices are incorporated that allow you to make good decisions on the available to promise, on yes or no allowing customer to order without payment. Yeah. What we see these days is that they also try not only to integrate areas within an organization, but expand across organizations, so go beyond their own individual organization. Suppliers and customers, EDI is an old technology, but it's still used today, electronic data interchange, that allows you to exchange information on orders, on invoices, on track and tracing, and so on. If, for instance, I want to order a product and I always use the same supplier, maybe I should stop with writing letters or doing a phone call or writing an email, but I can make a link between my ERP system and the system of my supplier, and I can even have it automatically done. So if a certain order comes into my system, the system will automatically determine, do I need to order something, yes or no, to replenish my inventory? And if so, it will automatically send an order to my supplier. You also see that in financial ways, as with electronic fund transfers, you have Isabel specifications which allow you to make sure that payments and to make sure that financial information exchange goes quicker and easier via those standards. You even see that they have specific XML, so extensible markup language. XML, most of you probably, I guess, know it. It's a way of structuring data in certain formats. They have XML formats for a lot of application domains, but now, for instance, also for accounting, the XBRL, the extensible business reporting language, and HR XML, so human resource extensible markup language, that allow you to provide information on HR, on accounting in a standardized way. What I showed, for instance, in the previous lecture, in the first lecture, where we saw this slide with the improvement of efficiency due to Axon Web, which is the Belgian application for normal natural persons, but also for companies to to declare their tax applications? Well, normal natural people, they just do it by clicks in the end user interface. Companies nowadays, they also have a standard way of reporting that data, and they will submit their financial data in a fixed format, for instance through XML, which allows them basically, if they adhere to that standardized format, to those standardized predefined semantics, to exchange that data from them with government organization or another organization, with their auditors, for instance. In the next few slides, and you can take a look at it at home if you want, but I've listed some of those functionalities in those different areas of ERP systems. For sales and marketing, you have the whole coverage of sales preparation, of the input and the tracking of sales order, and so on. For other areas like finance and reporting, you will have the management of accounts payable, receivable, the valuation of stocks, financial management, management reporting, and so on. Production and materials management, you have, of course, the MRP, but also the production schedule, and other areas that you might report to. For human resources, we have, of course, the basic data of our employees, but we also have the companies tracking, performance management, training and development. All those things are covered within the scope of those ERP packages. So they're very, very encompassing, very, very broad. Okay, we're almost now again 1 hour further. So I suggest that here again, we take a break of 11 minutes. So we start again at 15 past 11, sorry. Then we will much more briefly discuss those 2 remaining items in the horizontal typology, and then we will switch to management challenges. All right, see you in